Meanwhile, CoreWeave dropping for a second day in a row after announcing it's buying data center provider Core Scientific. The company getting a slew of downgrades today as analysts worry about near-term overhang. Citi putting the AI cloud infrastructure company on a 90-day downside catalyst watch. The analyst behind that call, Tyler Radke, joins us here on Fast Now. Tyler, great to have you with us. Nice to see you again. This all has to do with lockups, so it's sort of a technical alert. Can you walk us through?
Yeah, so I think there's a few things. One is the traditional IPO lockup window expiring. So next month, when CoreWeave reports their second quarter earnings, you will see roughly 85% of the Class A shares come onto the market. So that's a significant increase in volume for a stock that's been super squeezy. It's up 4x since the IPO. I also think the second thing that's maybe even more interesting, if you look at what happened yesterday after this deal was announced. This was an all-stock deal. Core Scientific, the deal price was basically a little over $20 a share. Core Scientific is below $15 a share. So you're seeing about a 30% spread. That's not reflecting a view of uncertainty of this closing. It's actually reflecting the high borrow cost. So the options market is actually suggesting that the forward price for CoreWeave in October is 120. So you look at those two things, a bunch of shares coming online, some really unusual pricing in the options market, and the stock being up 4x since the IPO and doing an all-stock deal sort of at the near-term peak, we think there's downside ahead for the stock.
Are you concerned by any chance, like all the debt that's being raised to finance the purchase of the chips are being used as collateral, the depreciation in which like a lot of these companies are allotting for these chips is probably pretty generous. So if you have a slowdown in demand, let's say you have this continued upgrade cycle where NVIDIA is like, okay, you got to go Hopper, Blackwell, Rubin, there could be a little bit of a problem with the slightest slowdown.
Yeah, I think that's true. Now, our view on fundamentals in the near term is positive in terms of where we think revenue is headed over the next year. So we actually did take up our revenue forecasts just because of what we're seeing out with some of these large contracts. Last week we saw a $30 billion annual deal from Oracle. Obviously that was coming off a really strong quarter for them. We're very bullish on Microsoft. But yeah, I mean, CoreWeave is absolutely it's levered to the AI data center build. So if you do have near-term disruptions, whether they be delays on the chipset side, slowdown in demand, this is going to be impacted more than anyone out there. But to be clear, we really do think AI demand is ramping up. Now, long term, we do have some concerns to some of the points you mentioned, how they're accounting for depreciation, rising competition, and ultimately, our view is that this is more of a data center provider rather than a true software company like some of the other hyperscalers out there.
Tyler, it's Karen. Thanks for being on. Do you like the deal yesterday, outside of all the other things that are going on with the stock, and would you anticipate them doing more of them?
Yeah, so I think this deal is interesting. There's kind of two sides to it. I mean, a year ago, they were rumored to making an offer to buy Core Scientific for $1 billion. So now they're paying $9 billion. So obviously a 9x increase, suggests maybe they should have done the deal a little bit earlier. But they are getting about 2 gigawatts of incremental power, which $9 billion for that is a pretty good deal, provided they can execute and realize a lot of the synergies. But ultimately what Core Scientific is, they do a lot of Bitcoin mining. They do a lot of kind of lower level stuff that CoreWeave partners with today. So they will be shutting down and repurposing some of that infrastructure. Ultimately, we view this as a play for them to increase their share in AI hyperscaler market. We think it's probably a good deal, but it does carry some execution risk, and it's a little hard to analyze just because they are going to be turning some of those services off and repurposing them.